following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Hope you had a good weekend, and hopefully the cold weather is going to be leaving for good down here in the south. So I'm excited about that possibility. Probably get snow in April. Who knows? That usually happens. I'm usually wrong. So here we go when it comes to the weather. Dollar. Let's take a look at this one. We're starting with this one because it's kind of possibly going to affect some other things we're going to talk about later. I hope you guys in the den are doing well. 99.63, that big number still. Got really, really close to it. Let's just see where we got here. 99.83. So, when you start getting into these long-term inflection points, especially in a pretty wide profile, you got to be willing to maybe give yourself some noise areas to kind of play around with. This morning, here's the action on the daily on the dollar. So sometimes it's not worth trying to save a couple of pennies and wait for that perfect tick to happen right on these inflection points and miss an entirely larger type trading bounce situation. So I'm not expecting the dollar to bounce too much here. But again, we kind of got to, market comes to you kind of trading opportunity here. And here's the 60-minute when it comes to the dollar. Here's that situation that just happened in the last last 5 or 6 hours. Larry's asking me to look at the dollar. I will do anything Larry asks me to do when it comes to looking at charts. So where do I think this thing's headed? The bounce scenario, I think, is probably going to have its limitations around 100.80. And then I think we're just going to probably revisit these 99.63 type neighborhood lows. And I got a feeling we're going to probably pierce that at some point. Let's take a look at a couple of commodities. Obviously, some commodities are pretty related to the dollar. Crude, man, didn't really get that strong a weekly close that I was looking for to kind of say we're back in the balanced area. This was kind of almost closing right on the unfair lows on the weekly there. If you can see that, I think we had a defined close of 48.78 Friday afternoon, and the unfair lows are at 48.67. So I wouldn't call that being happy to be back in the balanced area. And this week it's already kind of started selling off. And this is not exactly the type of action you want to see from the long side. I mean, you see it kind of reacting to the dollar, bouncing a little bit here. And here's crude on the daily. So, if the dollar's going to bounce a little bit more, crude, could actually come through these 47.76s. And I'm not so sure there's a huge edge in trading crude right now. So I'd rather let the dollar do what it's going to do, define itself a little bit more to start looking at crude. I know crude doesn't just hinge totally on the dollar, but seems pretty weak here. And if you kind of step back and look at it right now, we've kind of just hovered around these unfair lows on the weekly, and that daily may not hold that 47.76. So if that happens, and you had some decent resistance here between that weekly and daily inflection point. Let me just pull up our scanner here for a second. Let me go to the futures section. And when I look at crude, here's the weekly. There's that 48.76, and there's that 48.37. Make sure we're on I got to check the contract month there on the scanner. Make sure we're, I'll check that on the break. We may have rolled into May already. Let's take a look at, I'm not so sure that crude's going to hold up is what I'm trying to say. Yeah. So I'm an idiot. Let me, I always get confused because, eSignal, maybe they hang on to the contract too long, because if you look at the continuous on crude, it's indexed to April still. Let me save that. So we need to call eSignal also P. There's the numbers we're talking about on May. So that was in the scanner already. So there you go. There's that 48.37 and there's that 48.76. So we're kind of in a little bit of a DMZ there when it comes to crude, and May is the contract. All right. So I don't know why eSignal does that. They hang on to the continuouses forever. Okay. So let's take a look at the S&Ps really quick. Kind of hanging in there above this 2371. Here's the long-term weekly view. We definitely have a new profile this week. We found that out as of Friday's close. We had that yellow bar that shows in the scanners a yellow peel back in some of the cells. So to explore fair auction downward, 2341.30. And that's also coupled with these unfair lows on the daily. So I don't see a lot of hope for the market rallying right now. I think we could kind of meander back down into these balanced areas on the weekly and the daily now. And remember that this weekly, not a big, massive, especially on an average basis for the last 5 or 6 profiles, a pretty thin profile. A lot of times they'll kind of be a harbinger of breakouts in a big way. And I think we could easily, I think the odds right now, the edge is to not be long. So I think you've got some things in your favor, especially if we can get a daily close back down below 2371. But I think you could actually kind of jump the gun here and start trading with some stops, of course, trading shorts down into that 2341, 2343. Okay. Going back to the scanner, trying to get this out to you today. I want to fix one more thing. In the matrix, I want to fix this custom beta. This is what they're working on right now. This is such a cool scene right here. I'll be going over that with you. But as we look at the S&Ps, there's no big, huge cracks in the armor up here. That's the only thing concerning. A lot of the stocks in the S&P are still just kind of hanging out and happy on positive breath side. So keep that in mind. I think small pullbacks, 2341, 2343, going to be something you have to look at this after we get down there again. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're taking a look at gold now. Let's take a look at the weekly unfair highs, that big number we talked about, 1235, 1236, rounded off. So last week got pretty close to it, closed within the balance area. Dollar just, ticking up a little bit here. It's the only reason I think gold's even ticking down. I told you this wouldn't be anything I'd be looking to short back up into this area. This is just kind of what some of the targets on some of the bounces that we tried to play off the 1200 area last week. So again, trying to block out the short side on gold. And when we pierced that 1235, 1236 area on the weeklies, you knew that it was trying to, time to try to figure out when the next buy point was. So you had something around 1231, which is pretty close to that area, had to wash out. And then 1200 is where we talked about really trying to put a stake in the ground on the long side again. Initial target's 1217. So we came back and retested that. Some violent action that day. Whew. And getting into 1235, 1236 again was some target-rich areas. But right now, what do you do moving forward? I think you just pass on the shorts here against this, major inflection point here. This is all in the scanner. Let me go into the futures section here really quick. And there's gold. So as I look at gold, I'm going to pull up the weekly here. This is kind of the landscape view, seeing the multi-time frames here. There's that 1217, there's the 1200. Here's that 1235, 1236. So, I think you just pass on the shorts and you wait for breakouts above 1236 now, or trade support down to 1217. I don't see any reason in the world to trade gold from the short side at all right now. So you're kind of taking that out of play. Let's take a look at the 30-year. Somebody's asking about in the den. Sure, why not? All right, so kind of a weird reaction, kind of a relief action, I guess, after the FOMC situation. But the big number to pay attention to, obviously 148.29. So we reached a high last week on Friday, actually. What was that? Let me see. Was that Friday? Yeah. Wednesday, Thursday, Friday. Couldn't get through this area this week already. We've touched a high of 148.27. So gotten really close to that and backed off. So yeah, I like how this thing can't seem to pop through this area, and this morning starting to kind of come off a little bit. I like this from the short side now. I like the technical damage that happened previous week, and I like the retracement back up into that. That's that powerful trade that we usually look for. And putting stops above 148.29 might not be a bad idea still. I don't think the train's left still on the short side on the 30-year. I think we actually could go a little bit lower. So there's a long-term view just looking at that. All right, somebody's asking about beans and wheat. Let's just hit that really quick. And man, wheat is just not, something's going to happen in wheat. Everybody just left it alone from the farmer side. I think that thing could see some upside in that. But we'll take a look at it in 2 seconds. All right, so we want to look at November beans somebody's asking about. Here's the May contract. Just to let you know, we talked about that $10 area. Don't know if we're going to bounce here, though. Just don't know. Not actually trying to trade that bounce. Let's take a look at November here really quick. Here we go. So new crop beans versus old crop beans. I mean, this is kind of where we're at on the new crop. You know, where's the edge? Here's the dailies. You know, I think the way to trade beans right now is maybe with some options and buying some strangles. I don't know. I don't see a lot of edge here right now, and I think the bean crop, there's kind of a tug of war between two different factions, the South America information and the perceived weather situations that could happen in the States. But I mean, some of the folks I've been talking to, they're not swearing to me, but they're pretty heavily bet on beans getting down below $9. Put it that way. Okay, somebody's at. I see the question marks in the den. What do 2 yellow bars mean? Okay, where are you seeing those in the scanner? Let me find out here. Oh, okay. Okay, this means that we're probably going to have a new profile here. The question was, what does this yellow bar mean right here? We're probably going to have another profile here appearing on the daily. And, I don't know if, let me look in the scanner here really quick. This is November beans. That's why it's not in the scanner. The scanner's tracking May. This is actually pretty rare. As we look at this, maybe the good news is we may have a new profile that's kind of an inside profile here after this one today. So that would be, and if that's the case, then I think that's time to trade breakouts outside of that new daily profile. But right now, it's just kind of a head scratcher right now for beans. I'm a little bit more slanted towards the short side just because I'm getting flooded with information that beans are going to go lower. But right now, I don't see any technical edge here, so to speak. I mean, $10, is obviously kind of a big number for beans. All right, let's take a look at silver. Oh, God, we got to hit wheat. I'm sorry about that. Let's look at July wheat. So, wheat's kind of come all the way back into this area that I think we looked at Kansas City wheat, which John from Philadelphia alerted us to. That was just a sick trade in a good way. But we've come all the way back to support here at around 453 and a half. We actually closed last week in the balanced area, which is not good. But I like how we're opening here, and I'd rather trade this from the long side than the short side. I think, you know, some of the fundamental things that John said, I guess maybe a month ago, I think are going to hold true here. I think, you know, I think the risk is actually to be short this product. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So, covered wheat a little bit, soy. I want to look at some stocks here really quick. I got to look at Tesla for you. Here we go. So, here's that big bounce that we've had off that weekly on furlough 241, and here's the daily situation. So, we always, and you can see these in the scanner. You can see previous unfair highs. You can kind of put your mouse over them, let me do that for you really quick. So if I go into the dashboard and I go to Apple, or excuse me, Tesla, what am I talking about? Well, I've lost my second screen. Oh, there we go. Okay. So you can mouse over just like that and see 266.87. The reason I'm doing that is because, you know, when we do these bounces and we get into the ether again, you're looking for, and I kind of look at these as an exponential moving average, the way it kind of weights things on a relative scale to recent activity. So when you have an exponential moving average, it's kind of weighted in the near term in history. Same for profiles. So that 266.87 is a pretty big number. We're kind of backing off of that. There it is on e-signal. It's a little easier to see. I think we got as high Thursday as what is this? 266. What is that? 260, 266, 267 rounded off. So what do you do with Tesla now? It's a pretty hard stock to short. And right now you don't have a lot of edge at all. I mean, so this will be something I would be avoiding right now. There's just nothing to hang on. No way to play defense, put it that way. And I summed up wheat. Somebody was asking me, I think the risk is to be short wheat right now. Soy's a little bit more up in the air. That's what I was saying. It was a head scratcher. All right, so let me get the right time frame up on Apple. Somebody was asking, is it time to short Apple? Did this big key reversal day, you know, I mean, if you can call it a big a big reversal. It's funny. I'm sorry. It's funny when we talk about Apple, we talk about a 2-point pullback as a massive reversal. So, you know, really still no signs to take this trade off on the long side. Definitely no signs to be short. Here's the weekly. We just looked at the daily. I mean, give me a break. Ooh, this is playing with fire shorting this right now. Let's take a look at a couple of sectors here. That is not a real tick. No. Almost gave me a heart attack there. Well, we got some bad information there. I think we reached a low. What is that? Friday. 24.33. So, you know, I mean, the kind of wishful thinking here is there's 23.87, there's 23.80. So, you know, the XLF, you could trade down into that kind of last breakout point on the weekly, and that's a nice little situation of two time frames lining up. Let me pull that up in the scanner for you so you can see that on landscape view. XLF. So there's the weekly unfair highs at 23.87. There's that kind of, you know, you're in an uptrend pulling back to the support, maximum support on the daily, which coincides pretty much with that weekly unfair high. So that would be the buy point there. If you're, you know, kind of interested in, here's the daily. We've kind of pierced that area, 24.57. You could trade that down if you're kind of looking to be a little daring there. That's the situation on the XLF. I want to go into the XLU. There we go. Let me pull up the weekly here. Okay, so this is kind of cool what's happening right now. Let me pull up e-signals charts here really quick. Sorry, guys. I'm stuck in the mud here this morning. So this is pretty cool. That happened last week. You got a profile up here below price action, which is always really bullish, believe it or not. And, you know, as you look at the daily, we pulled back a little bit. We've gotten back in the balanced area, but I would not, based on that weekly, be trying to trade any shorts in the XLU right now. Looks like we're printing, and we hadn't started printing this morning, but I think you got to be looking at trading breakouts again above 51.64 or buying 50.59, just based on that weekly action that happened last week. I'm telling you, we've looked at all this stuff historically, statistically speaking. That is a bullish scenario. Let's take a look at the XLE. And I will look at live cattle in just 2 seconds. So the XLE kind of provided a little bit of a trading opportunity down here at 68.14. Crude's not looking too good. We could revisit that area on the XLE. If you're going to look at trading the XLE, there's some decent opportunities within the sector. If you're going to try to play defense with some better looking longs, if you want to be long crude oil or you want to be long the XLE, you've got a chance to drill down into this sector by doing this. Daggone it. Okay. Here we go. Here we go. Cellar dweller. Okay, so let's see if we can find something, just to give you an example. All right, rig. I like the heck out of this setup a lot. We talked about this last week. I think somebody called in about rig. And we are just sitting at a pretty killer area right now. And this is, I think we got a couple of prints this morning, 1241. So, you know, this daily and weekly, this is our weekly with that just nice market came to you type scenario. And here's the daily here, just still kind of sitting around these daily unfair highs. I like this setup. I like how we kind of popped up away from that weekly unfair high. This is a pretty low risk trade right now, in my opinion. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yeah, we thought about doing the show on an inversion table today, but Tom didn't let me do it. So blame it on Tom. We're not doing an upside down show today. Here we go. All right. So talked a little bit about the 30-year earlier, and I wanted to get back to that, but somebody asked me to do live cattle August. Okay. So here's the weekly on live cattle on the August contract. I don't see any reason to take the trade off right now. I mean, I don't trade live cattle. So, there's nothing really giving you any hints that things are going to slow down on any time frame, really. So I'm looking at the 240s, the dailies. That's basically all I have on it. I don't know the fundamentals. Teeter. Number one inversion table, Teeter. It's pretty cool product. Anything that helps the brain is welcome over here, P. Anyway, let's take a look at copper. Something I've been following, and I know this thing's kind of stuck right in the middle. We had a really good pullback opportunity the other day at 2.56. I really think this thing can go higher and actually make new highs on copper. The latest kind of way you've got to play defense on the long side is stops below 265 on this, but I think 275.29, stops below 265.17. We kind of jumped up a little bit here again, but I think that risk reward's still decent. So going back to the scanner, I want to show you something. This matrix feature, this custom beta we're tinkering with right now, but what this thing does is it allows you to come in here. So let's just go back to the dashboard. I'm the most organized person in the world. Here we go. So here we go. If you're looking for those opportunities and you go in here to your quick navigation and let's just say you want to, a lot of times I'll have these over here, but you've got some, about 5 or 6 custom sorts. It's got some thought put into them. But if you want to go to the matrix in the new release here, it's going to basically put them all right here in an area where you can get entry stops, and to do a risk reward, you need an entry, a stop, and a target. So the target is if it's not known via the breakout or the breakdown, we use the 13 look back average true range. So if it's known, if it's a regression trade, as we call it, like kind of pulling back to the bottom of the profile and all things are hunky-dory to kind of still look at that from the long side, then you've got the other side of the box. Okay, so that would be the target in that case. So you've either got that 13-week average true range as a breakout or breakdown target, which is a pretty good way to look at targets if they break out. Then you've got the stops relative to the profile. And you've also got a chance to look at 50-day beta and custom beta. So this custom beta, you can dial in and see, what is the stock or the instrument, and you can go in here and load any type of instrument bank you want in this thing, ETFs and currencies and futures and what have you. And see, like, well, this stock is breaking out. It normally acts with the market. It's 50-day betas. It is what it is. But right now the market's not actually breaking out, and you've got an anomaly going on by what the stock may have been doing recently as a beta component, dialing in, the look back period to develop a custom beta. So I'll do some videos on this. I'm probably being pretty confusing right now, but it's a pretty cool addition to this scanner, and I kind of like the way it looks now. And you can kind of go through instruments pretty quickly and kind of review how they look in addition to. So there's a breakdown, obviously, Capital One, and there's the daily unfair lows, and here's the weekly setup on Capital One. So the target right now on Capital One would be that 86.88, okay? And the stops are oriented around that breakdown. Okay, so that's what the risk reward's developed on. And you see that risk reward is 1.5 right now. I think this is going to be, I don't think there's anything else out there like this. And I think it's going to be an extremely useful tool for you guys. There's Amazon. My God. So uptrend support, it's on that particular scene. Risk reward's pretty low on that trade. But we'll talk about this further. I hope I can get this out today. There was Alaska Airlines. Let me take a look at that one. So there's Alaska Air. And again, uptrend reversal. That's the weekly. Here's the daily. All right, so let's get back to the 30-year for a second. All right, so I'm sure Tom's just got a ton of thoughts on this, but this particular product's pretty far in the hole. The good news is, I think, we had that technical breakdown on the weekly, and we've just kind of rallied back up into that latest breakdown point and that big inflection point at 148.29. Remember, if we get a weekly close above here, all bets are off for a little while, but this is going to be your kind of thing to lean on, in my opinion, right now. If the market comes off a little bit here and the 30-year kind of sits still and just kind of spins around below this 148.29, I think that's going to put some more writing on the wall. Here's Coke. I have talked about how much I like this short, and last week kind of proved itself again. I think 42.40 stops above. I think your risk reward on this one's really cool. 40.51 down below on that particular product. AXP, we talked about, taking some, if you've been long these financials, there's some reasons you've had to kind of take some weight off. AXP, the big buy point, 76.05. I think you got to wait and see on that one. You could kind of trade this with stops above 80 on this one and kind of trade it back into that 76.05, but be a little bit more of a scarier trade. Home Depot is one we've been pounding the desk on, just staying long. Just no reason to take this off. Here's the weekly. Here's the daily. And again, this is, would be in the scanner, uptrend support in this area here, but just no reasons to take this trade off at all. Still, amazingly so. Let's take a look at international paper. All right, so we'll talk about this when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So international paper, I was just saying I kind of like this stock a lot actually for the long term, but right now it's kind of a wait and see. We need to kind of cross the border and get back above 51.40 on international paper. So in the scanner, I want to show you this feature too. So if I was just interested, and I had CarMax up, I had kind of blocked out the longs here. So you can block out the longs or any particular sort up here, block out the shorts. So I'm a little more short-minded than long-minded right now on the S&P. So I'm looking for, therefore, instruments that I can drill down into that might be showing some opportunities on the short side instead of just trying to trade the S&Ps from the short side. So I looked at CarMax. I just hit this, and here's the weekly view on CarMax. So we've had a little bit of a breakdown here on the weekly on CarMax. That's why it's sitting here. There's an entry. I don't know if you can hear what's going on in the background here. Here's an entry, and that's why I put it on your radar screen there. Yes, it's quite a few of them here. Anyway, so let's take a look at a couple other opportunities here. Let's some oil stocks on here for sure, or XLE stocks. But let's take a look at General Mills. We've kind of had this on our radar screen on the short side for a while, and again, this is not the day trader's dream or something that it's going to put you on the edge of your seat. But we've talked about this one. Being able to look at it from the short side, it's kind of hovering right at these weekly unfair lows. You got a way to play defense here, 60.84. I like how that's acting. Level 3 communications. I really like this setup here. We looked at it as a kind of a weaker stock. It broke down, and now it's rallied back up into that area where you can whack it. So where's that area? 57.64. It's right there. It's kind of cool how this puts some, decent opportunities right in your face there. So I could obviously come in here and kind of get rid of some things and this and that and blah, blah, blah. And I could see the sorts that are meeting the criteria from those particular custom sorts up there, which is kind of cool. International paper. See, it's on downtrend resistance. We just covered that, but again, that's why I said you'd have to wait until this crosses the border at 51.40 to get long again. International paper. All right. Just revisiting a couple of things before we close out the show. Gold, interested in buying breakouts above 12.35, 12.36, or pullbacks to 12.17. A little bit of a trading bounce down here, but I don't see a lot of this continuing to happen. So it's going to be interesting to see if we can get below 99.63 and especially get a weekly close below there. I know it's Monday, but I wouldn't mind jumping the gun and trading that from the short side if we cross that border. China, hadn't looked at this. China, still kind of hovering around here. I still think we can actually shoot for 35.21. So I'd look at be trading the ETFs from the long side on that. Silver, not as attractive looking as gold, I don't think there. So I'm staying away from that. I think the leverage is to trade gold from the long side. Guys, stay tuned for Larry. You'll thoroughly enjoy it. We'll see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.